Good afternoon. I would like to welcome you to this very special HealthSource Rhode Island for Employers broker webinar. Today we have a very special guest. Joining us is Dr. Marie Ganim, Rhode Island's Health Insurance Commissioner. She's going to be talking about giving you an inside scoop on some of the latest happenings. So first, let's do some basic housekeeping on who HealthSource Rhode Island for Employers is. For brokers, we provide unique services and exclusive products that provide the ultimate in value add. We help you work with clients one-on-one for the ultimate in service for your clients. As you know, the key to attracting and retaining talented employees in a competitive job market is the ability to offer a competitive benefits package. The exclusive source for offering HealthSource. We are the exclusive source to offer your clients options for multiple insurance companies known as our exclusive full choice program. You offer plans to your clients from multiple reputable, well-known insurance carriers across all metal levels, and you can't do this anywhere else. Making this even better for your small business clients, there are no eligibility requirements. The money guys, financial professionals, CPAs, love our defined contribution strategy. As you know, you can let business owners determine their budget while their employees choose the best option for their families, again, the ultimate in customization. Adding to this is the option to tier contributions. This means your client's contribution may allow some employees to pay 100% of a lower cost plan. And again, it gives them an opportunity to find the health care plans that work for them. Thanks to our partnership with NFP Health, HSA Insurance, the largest private exchange in New England, we're able to provide an expanded line of ancillary products, typically found only in the large group market, including vision, life, accident, telemedicine, pet insurance, identity theft, legal, and others. These options provide peace of mind for your employers and employees, and they may help your clients save on health care costs. Our program is a game changer for brokers, a one-stop solution for all your small business clients, wrapped up in unprecedented service and support for you, your clients, and their employees. So, without further ado, I am going to introduce Rhode Island's Office of the Insurance Commissioner, Director, Dr. Marie Ganim.
Thank you, and welcome. So the Office of the Health Insurance Commissioner in Rhode Island is pretty unique. It was established to do the same things as other states' insurance offices, but a couple of additional functions were given to us. So first of all, as other insurance directors across the country, protecting consumers is of ultimate importance to us. Guarding the solvency of the insurance companies that we regulate, again, very important, and something that's done nationally. But what's unique to Rhode Island is that our office also looks at how providers are treated by insurers and also takes kind of a global look at improving quality, access, and affordability. So putting those four charges together, our office has kind of a unique role in the healthcare system in Rhode Island. And we can use various tools that we have at our disposal to regulate commercial insurers and create innovative policy. And our goal, of course, is to drive affordability of healthcare coverage. So one of the ways we pull this all together is by something we call rate review. And it is how our state looks at the premium rates that are filed and requested by health insurers each year. This slide just shows kind of an overview of what is causing the growth of our healthcare spending in our state and across the country. And you can look at all of these different factors, but basically it has to do with volume and price, just like anything that you do in your business. So certainly the price times the volume, and you end up with the cost. So if we can try to control both of these or one of these factors, we certainly should be able to bring costs down. So every year, the insurers in our state file with the Office of the Health Insurance Commissioner their forms, basically the materials that you use with your clients, the materials that the subscribers see, those forms, and also their rates, what they're proposing to charge, what their actuaries have projected that they will need for their rates. That comes in the springtime usually, and we look at them separately in the individual market, the small group market, and the large group market. We do not have jurisdiction over self-insureds for the most part when it comes to their rating particularly. The rate filings are usually based on the assumptions that the insurers made. So they look at what their health care cost experience has been. They look at what they're projecting their utilization to be. They add to that what they expect their administrative costs to be and some contributions to reserves or to profits. Now, when we take a close look at these assumptions, we have our own actuaries and we have our own guideposts in terms of how much we are willing to put forward in terms of reserves, profit, administrative costs. And we look at their assumptions to see if, in fact, they're valid, and we look at them across the whole healthcare market. So we do our own actuarial analysis. We inspect all of their assumptions. We really try to get the rates down to the lowest possible amount for the businesses and the individuals who purchase them. And then the work that we do is used to help us establish what the rates are on HSRI for the plans that are offered here. So in June and July of each year, we usually go out for public comment, and that is the time when we hear from consumers, and we definitely hear from employers who come in and submit public comment on the rates that have been filed. And usually, of course, as you can imagine, we hear from businesses who are struggling to pay for their health insurance. And it's very helpful to get that input. The stories that are told, the examples that are used, not only help to guide our decision making, but help to remind us really what we're in this for. We want to ensure that you have access to health insurance, that the businesses that you're working with have access to affordable health insurance. And so these reminders and these public comment periods are very, very helpful to us. In August and September, we actually set about determining what the rates are. We can either approve the rates as they're filed, we can modify them, or we can reject them. And so far, most of our work has been around modification of rates that are filed. No fully insured commercial rate can change without our approval through the Office of the Health Insurance Commissioner. In the fall of each year, HSRI certifies what plans are going to be offered on the exchange, so you can see our time frame flows right into that process. So then they have their open enrollment period, and in January the rates take effect. So this slide shows what the impact of the Office of the Health Insurance Commissioner's rate review process has been on rates, and this combines both the group markets and the individual markets. So you can see when in 2012, the Affordable Care Act became available and started actually providing some increased financing to insurance departments across the country to really buckle down and take a really hard look at rates and how affordable they were. So in 2012, we actually were able to take about $60 million out of what was being proposed for rate increases across the market here in Rhode Island. Again, 2013, almost about the same. And then we have to assume that the insurers said, okay, clearly there are some different standards now that we're being held to, and instead of requesting these huge rate increases, let's try to pare them down. Now we know what the approval process is like. So you can see that the rate requests that came in 2014 were just a little over $30 million above what we were willing to approve. And going forward, you can see that number kind of decreasing over time. And in 2019, premiums will be almost $22 million lower than what the insurers originally asked us to approve. Since 2012, the rate setting process has actually pulled $258 million away from what was requested to what was actually approved. And then market stability is the next activity that our office takes very seriously. So certainly if we want to have a vibrant market for you to be able to sell products in, we have to make certain that it's stable. And there are a number of reasons why our market may be stable or unstable. So first of all, we're very proud of the rate of the uninsured in our state. Actually, we're very proud of the rate of the number of people who have insurance. So thankfully to the expansion of Medicaid and to HSRI's very good work in terms of getting the word out and getting people insured, we've gone from almost 12% to 4% of our population without insurance. So that was 120,000 people without insurance when we started, down to about 40,000 people without insurance right now in our state. Under the Affordable Care Act's Medicaid expansion, we enrolled about 75,000 low-income adults in coverage. These individuals did not have access to affordable insurance prior to this time, and we know that many of them, as a result, were not accessing health care. And they were probably using uncompensated care in emergency departments more readily. Over 37,000 Rhode Islanders access our commercial health insurance through HealthSource RI, through the individual and the small group markets. And many of those individuals qualify for tax credits, which helps to bring the cost of their insurance products down. Through the enhanced form and rate review that we just talked about, we mentioned that the OHIC has reduced premiums. In addition to that, the average HealthSource RI premiums have decreased. And when you look at our HealthSource RI premiums, we not only look good compared to other states, we look great. Our premiums are either, for the plan that is most often compared, we have either the lowest or the next to the lowest premium on an exchange. So we've done a lot of work in Rhode Island, and HealthSource RI has really been very aggressive in trying to keep costs down. Rhode Islanders have benefited from approximately $375 million in federal financial assistance provided through the Affordable Care Act, and that has come in the form of the Medicaid expansion and the subsidies that are offered on HSRI and other affordability finances. When we talk about the Affordable Care Act and people talk about it that it may be going away, this is the biggest threat to us, is that if any of these dollars were to be gone, there are certainly other factors of the ACA that we can possibly look at and possibly say we can continue those, but this actual financial support that we've been getting is really the most important. And then consumers have had a choice of plans and carriers, and you know as brokers how important that is, to be able to suit the needs of the individuals and the employers and the employees that you work with. So we have been able to have those accomplishments in the state of Rhode Island. We like to say that the Affordable Care Act is working in Rhode Island. So what's challenging us now, and what are we looking at? Well, certainly there are policy changes being made at the federal level, and they have been ongoing for a couple of years now, and they don't seem to be letting up anytime soon. But those federal policy changes really threaten our stability. And by stability, most often we mean the rates that people pay, the amount of choice that we have in the insurance market, and the stability of the insurers in that market. We want the market to be as attractive as possible, not only for those people who are purchasing insurance, but also for those who are selling the insurance, to make certain that they stay in, that we have robust competition and choice in the marketplace. And one way to do that is to have stability of the folks, of the individuals, of the groups who stay in the market. We put together, HSRI and OHIC, about a year ago, a market stability work group. And that work group has on it an array of individuals representing, actually, brokers. We have business community, we have healthcare providers, and we have regulators, people from the state, all spectrum of individuals. And we started to talk about some of the risks to our market stability in Rhode Island. And that group came up with 3 guiding principles. The first is to sustain a balanced risk pool. Let's make sure we have healthy lives and with the less healthy lives all in the same pool, sharing the same resources. Let's maintain a market that's attractive to carriers, to consumers, and to providers. And let's protect the coverage gains that we've achieved under the Affordable Care Act. We want to see that 4% uninsured go down, not go up. So the work group, as I mentioned, is made up of a broad array of individuals, and they have been giving so much of their time and their expertise. It's been a really great process. So here are the key concerns that the group has faced and that we've talked about over the months that the group's been meeting. One is that we're very much afraid that by losing the federal government's penalty for individuals who do not have insurance, so it's often called the individual mandate penalty, by losing that in the recent tax reform package that came through Congress and the administration, that younger, healthier individuals will drop coverage. They will say, well, there's no harm. If I don't have coverage, I don't have to pay a penalty. So they will leave the market, and we all know that that would leave people who maybe have higher health risks in the market because they need the insurance. We all know what happens when that happens. Healthier lives leave, riskier lives stay in, prices go up. If prices go up, riskier, costlier populations remain enrolled, non-group and small business coverage costs will increase. So this choice of getting out of the market doesn't only apply to the individual market, but individuals in the businesses that you also are providing insurance to may see that the younger, healthy people drop out of that market. They don't want to pay their employee share, and they'll also drop out. And that will then increase the cost for the businesses that you're selling insurance to. Of course, we're very worried about loss of coverage. The coverage gains that we've made, we're excited about, but as individuals leave, if they leave the market, other people will get priced out. And then there's this spiraling. Rates will go up, people drop out. Rates will go up, people will drop out. And that's the market instability that we want to avoid here in our state. Other states have actually already experienced it and have seen rates go up maybe 30, 40% in a given year. We don't want that to happen here, so the action of this market stability work group is to try to avoid this spiraling. We also want to avoid uncompensated care going up. Prior to the Affordable Care Act, our hospitals in particular, but many of our medical community, were experiencing large numbers of people coming either woefully underinsured or uninsured. And we want to make certain that we keep the gains that we have now and keep our uncompensated care down as low as we possibly can. And then lastly, we've seen some efforts at the federal government to erode some of our key consumer protections and some of the essential benefits that we find so important to keep in place for consumers. Some of the new rules will allow plans to be sold, whether on the exchange or outside, that are not compliant with the basic ACA. Again, the effort would be to pull young, healthy lives out of the marketplace, and that would further compromise both our individual market and our small business risk pools. We'll talk a little bit more about that. So the first round of recommendations from the work group came in the spring of 2018 in time for us to talk to the legislature about getting some approval. The first recommendation was that we needed permission from our state, particularly the legislature, in order for HSRI to apply for what we call a 1332 waiver. Basically, that's just permission from the federal government to not fully do something the way the ACA says it, but with permission to kind of waive that activity. So what the federal government has been doing is working with states, and there are at least 7 already, working with them to establish what we're calling reinsurance programs. And they're taking the amount of money that they would be paying for subsidies on the exchanges in these states, and they're saying, boy, if premiums go down, then our subsidy is going to go down, the federal subsidy. Let's take the money that we're spending on premium subsidies right now and put it into lowering premiums, saving the federal government money in paying for those subsidies and helping everybody in the market by seeing lower premiums. So this would pertain particularly in the individual market. So we were successful in the last legislative session, thanks so much to the work of the governor's office and the legislature, to get permission to work on this waiver. And the actuarial assessments are being conducted right now. We also weren't successful in getting this piece of legislation for advanced, but hope to do it this year, and that is to allow my office, the Office of the Health Insurance Commissioner, to regulate short-term limited duration health plans. We want to make certain that consumers are not being sold products that are what you would all consider to be very inferior. I know that in the past, when short-term plans were available in our state, that many brokers used them as a way to fill gaps for people who are between insurance coverages. Well, right now, HSRI provides that role to a great extent, so that someone who loses their job and therefore loses their insurance, that's a qualifying event to buy on HSRI and to possibly qualify for Medicaid or for a sizable affordability subsidy to help you afford real comprehensive insurance. So I think we would think right now that short-term plans should meet the same consumer protections and the same standards as we offer in the individual market. And that's what we'd like to do. And then thirdly, to have a state-based shared responsibility requirement. So as we've talked about before, that if people believe that they don't have a requirement to buy insurance, just like someone might believe there's no requirement to buy auto insurance, they might take the risk of going uninsured. And what happens is if something occurs to that person, or if they had an accident and they weren't insured for their automobile, then they go, the impact of their costs are on the rest of us. So whether you go to the hospital, whether you cause an accident with someone else, however it occurs, the impact is felt on the rest of us who are paying for insurance. So we view a state-based shared responsibility requirement as essential to keep particularly the healthy people in our insurance market. We received during the last rate filing that came in, we asked the health insurers to estimate what they thought losing the individual mandate might mean to their rates. And Neighborhood Health Plan actually asked for a 2% rate increase just tied to losing this federal penalty, the federal shared responsibility penalty. So and that's just in the first year, the 2019. So we actually see that there is exactly a great an impact of losing the federal penalty on rates and on who will be in the pool. Currently, the work group is meeting again, and we have some more specific policy recommendations on these findings. So, to talk a little bit about reinsurance, I think those of you who are brokers might understand that a whole lot better than most people in the general public do. But reinsurance basically is viewed as a way to stabilize our premiums by paying for some of the most expensive claims for persons insured in the individual market. Again, during our most recent rate filings, Blue Cross in the individual market calculated what their 6 highest cost patients, now this is just 6 patients in the Blue Cross individual market, what those 6 highest patients cost. There was, again, a 2% calculation. So 2% of premium was tied to 6 patients. So they came in asking for about a 10.7, I believe, percent increase. And 2% was tied to these highest cost patients that they expect will continue as Blue Cross patients going forward. So just to give you a little bit of an example to put in perspective why it's so important for the insurers to know if there is a reinsurance program, to be able to ascertain where their risk ends and where the reinsurance program risk begins. We definitely calculate that rates across the board, rate increases across the board will be lowered if we have a reinsurance program in place. In year 1, the highest cost claims will be either paid in full or paid partially by the reinsurance program. And in year 2, the insurers will have the certainty of where their risk begins and ends when they're calculating their premiums going forward. So this will have a stabilizing influence. Of course, you would look at this and say, okay, that's fine, but how are you going to pay for this? The answer that the Market Stability Workgroup has come up with is that the federal government, again, through this waiver process, will identify a chunk of money, hopefully, that they're paying right now in subsidies that would actually go down if our premiums go down due to reinsurance. And the federal government is willing, they call that pass-through dollars. They're willing to give us whatever that estimated pass-through amount is. We do need a state match, however. So the Market Stability Workgroup has come up with a plan that if we do have a penalty in place for people who are uninsured, that the dollars raised by that penalty will go into a fund that will pay for, if not in total, but hopefully in total, the reinsurance program. So this slide is just an example of how the reinsurance program works. Basically, it will reduce the insurer's claims costs. It will cover a portion of the most expensive claims. It will reduce uncertainty and volatility. And the attachment points, how much is subsidized actually, can be adjusted based on how much resources we have and based on how much we want to impact rates year over year. Now, the plan for us is that we would propose this reinsurance program this year, and it would actually have an impact on 2020 rates. These are just examples of what other states have done. These are states that have gotten approval from the federal government to put reinsurance programs in place, and there are many others who are working on this same proposal. So you can see that the different states wanted to impact their premiums at different levels and wanted to invest at different levels. In the state of Maryland, as you can see, they were hoping for a 30% impact on rates. That means reducing their premium increases by 30%. In New Jersey, they negotiated with the federal government for a reinsurance program that they were targeting would reduce premium increases by 15%. In actuality, what came about was that there was about a 6% premium increase proposed, and they ended up decreasing by 9%. So the 6% minus the 15, and they ended up with a 9% decrease in their rates as proposed in New Jersey. And you can see how the other states are. So Rhode Island can be anywhere on the spectrum, depending again on how much we want to invest in the reinsurance program and how much impact we want to have on rate increases. Last year, for 2019 rates, we actually approved about an 8% rate increase in the individual market. So regulation of other plans. So this is probably something that's pretty important, I think, to the broker community to understand what the status is right now in Rhode Island regarding short-term limited duration plans. Currently, these plans are not approved by the Office of the Health Insurance Commissioner for sale. The reason for that is that we hold all insurance products to the standards that they must meet our mandated benefits, that they shouldn't have pre-existing condition exclusions, and that they should meet a minimum medical loss ratio. When the short-term plans might be proposed to be offered in Rhode Island, we would tell them these are the standards you're held to. And currently, none of the short-term plans actually have met those requirements. So that's a red flag to us. If, in fact, these plans don't want to meet a medical loss ratio that's reasonable, it shows us that they're not paying out as much in claims as they are paying out in their admin and their other non-claims expenses. They don't want to meet pre-existing condition exclusion limitations. It shows us that they're going to exclude people from their marketplace, just drawing the healthy lives out of our individual market. So that's been the process thus far. However, many of you probably know that these plans have been highly marketed in Rhode Island. I just got a call a few minutes ago that I believe was someone trying to sell me a short-term limited duration plan. The short-term plans that are being marketed nationally. The brokers that are offering them may or may not be licensed in our state, and when you try to ask them that, they hang up the phone. The products that they're offering do not offer a full scope of benefits. So they don't offer maternity coverage, pharmaceutical coverage, behavioral health services, and they're adjusted for health status, and they, as I mentioned, they have pre-existing condition exclusions just to try to get the healthy lives. What we found nationally, when we talk to the other insurance commissioners across the country, is that they find the marketing practices of these national brokers to be deceptive, that they find the products to be insufficient. So many insurance commissioners across the country will give examples of an individual who's bought a product, had cancer treatments, or has gotten other kinds of services and ended up with bills in the hundreds of thousands of dollars. So while it might seem as though they're buying an inexpensive product, they're actually paying much more at the other end because of the services that are not covered. So we're a little leery about short-term limited duration plans that are not regulated fully in our state, and that's the reason why we're seeking legislative authority to regulate them the same way we regulate other individual insurance products. So one of the concerns, of course, is that they would destabilize our risk pool by pulling healthy lives out of it. When you add to that the compounding effect of not having an individual mandate penalty, then that entices more people into this other market for short-term plans. And most short-term plans include significant barriers and limitation on coverage. So we're concerned about them for these reasons. So the shared responsibility requirement is another recommendation from the Market Stability Workgroup, and we're looking at a state-level requirement that will, for someone who to carry qualifying health insurance. A penalty would be assessed on state tax filers who don't cover insurance, and it would be targeted to the number of months during the year that the tax filer did not have qualifying insurance. But there are lots of exemptions, hardship exemptions. And this requirement would be, as it's been proposed in the governor's budget, modeled after the federal penalty requirement. So it would be taking the federal requirement that was just removed and basically putting it into place to a large extent at the state level. And this will help us maintain enrollment levels and keep the market stable. So we hope to have your support. There are many policy decisions that are going to be made in this 2019 legislative session in Rhode Island. They will affect the rates in 2020 and beyond. Certainly brokers bring a unique perspective, and we look forward to hearing from you, and I think the legislature would look forward to hearing from you. Then we'll move along to the other responsibilities of the Office of the Health Insurance Commissioner that have to do with transforming our healthcare system. So this slide just shows some of our plan of action and how we try to use our regulatory authority to actually drive efficiency, quality, payment reform, and cost growth containment. We actually hold the insurers responsible through our affordability standards for keeping their provider contracts, particularly those contracts with what we call accountable care entities or hospitals directly, to keep them to a certain level. We actually have a cap on those increases each year, and that has been very helpful in trying to keep our costs down in Rhode Island. We also engage stakeholders, and again, brokers are more than welcome to join in with us, but to have conversations about how we can bring rates under control, how we can bring costs under control, and how we can improve quality in the process and access. So we ensure that insurers comply with our affordability standards or our regulations basically through rate review and by asking them to report their data. We recently commissioned a report in 2018 for folks to look at, actually a consulting firm, to look at the acquisition of partners, the partners' acquisition of Care New England hospitals and that system in our state. We thought that we should look particularly at whether or not there will be an impact on our rates. And within our jurisdiction to look at affordability of health care in Rhode Island. So Baylor Health took a look, and we didn't have a lot of money to contract with them to do this, so they mostly looked at literature in terms of what happens when hospitals consolidate. They looked at available data, some financial statements that are on the health department's website. They looked at previous transactions in Massachusetts with partners, and they did some interviews with insurers. So the recommendations from this group, at least the observations from the consulting firm, was that there was a potential impact on rates, certainly, that if Partners is to acquire Care New England, that the impact could be from a number of sources. One is that as the Partners organizations attempt to build market share, that they will do that by buying physician practices and increasing Care New England hospital volume. Care New England is, we believe, one of the highest reimbursed hospital systems in our state, and that is kind of something that developed over time with women and infants particularly, and so we wonder about the influx of more patients into that system and what the impact might be. This isn't for certain, but this is actually the projection from this study. In addition to that, there's been a fear, and I'm sure that you've heard it, that because Partners is based in Massachusetts and the Boston academic medical centers are really their major hospitals, that we may see more of our patients being referred out of state or to Partners facilities elsewhere. And then the addition of facility fees is something that has occurred in other states, so that even if you go to a doctor's office, if that doctor's office is associated with a certain hospital system, there may be a facility fee associated with going to that physician. So we see a potential increase in rates associated with these factors. And then a little conversation about association health plans. Again, something that's probably come up in your conversations. And there's a new rule from the federal government that basically makes it a little bit easier for groups to form associations, specifically to sell insurance under terms that are more favorable to healthier people. There will be increased access to non-ACA compliant plans, drawing, again, we believe, healthier people out of the regulated market. And the interesting thing about the association health plans is that currently in Rhode Island, our small group market acts like one market. In fact, what the variables are for the small groups really are based on what product the small group selects and what the characteristics, particularly the age, of their employees are. So by pulling some lives out into an association should not have a great impact on rates unless, of course, the product design is less beneficial and unless the age of the folks in those plans that are pulled out are younger. So basically, again, it's segmenting the market. There'll be one market that's subject to the Affordable Care Act market rules, one that's not, one that has products that are comprehensive, and one that may have healthier lives but less comprehensive. So I used an analogy before, not in this conversation but in other places, that I think the association health plans are really an option for rearranging the deck chairs. They're not addressing basic costs. They're not giving more market power to one group or another. But in fact, what they're doing is just rearranging where the lives are, causing one segment to have higher costs and another segment to have lower. And analysts project that this could increase prices by more than 10% for those who need the ACA's more comprehensive coverage or who do not qualify for these less regulated options. So association health plans are not necessarily a solution to the problems of cost that we have. And then finally, I want to make certain that you are well aware as brokers of the options that your clients have to actually follow up on complaints and to get information that they might need. So we contract with an organization called the Rhode Island Parent Information Network, RIPIN. They have a call center. This is the number that's on the screen. They answer from Monday through Friday, 8 to 5, and they also have off-hours voicemail. They're trained consumer assistance specialists. They provide consumers with information. So if you have an individual who you're maybe not able to work with because you're working only with businesses, you can refer the individual to this line to get assistance. Certainly, I think the first line would be the HealthSource RI, but certainly if there's anything greater, they could go to this consumer helpline. What they do a lot of, though, is track down questions and problems. So if somebody has a claim that's been denied, if they're questioning what does it mean that I have to go to in-network, why is my copayment different, those kinds of questions can be answered or at least attempted to be answered by using RIPIN in this helpline. So they work directly with our office and they will let us know when there's something of real concern that we need to get involved in.
So thank you so much, Dr. Ganim. And as you can see, Dr. Ganim has been extremely proactive working with the business community, brokers, the business community. We've all benefited from the Herculean efforts of her office working with the administration to stabilize the market. And I know Dr. Ganim welcomes input from the broker community. It's essential as we move forward. And speaking of which, we value your input. Our program is built on working with the brokers and our relationships, so we want your feedback. We'd like to hear your thoughts about today, any questions that you have, and certainly if you have topics and suggestions for future webinars, please let us know. You can always reach out to our program if you are looking to get certified. If you're a broker that's listening to this for the first time today and you're interested in getting certified with us, you can reach out to Jocelyn at 401-236-8019. Or if you want to meet with our sales manager, Fran Ziot, you can reach her at 401-236-8009. Again, thank you so much for your time and listening with us today. We welcome your feedback.
Perfect. That was amazing.
Great.
You guys did
You're too good. You're a community takeover. I do this whole day. I need three of them.
Don't forget to chat me. No, that was wonderful. That was absolutely good.